Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
This is Daniel Ives of Wedbush. First of all, rocking it out of Las Vegas with Aston Martin. For those of you on radio, he's got the real jacket on, like the kind that Lance Alonso wearing, all that. What in Formula One, with all the excitement, Apple taking over the broadcast, Cadillac coming in next year, when you're in the pit like you were, what's the thing that you don't know when you watch on TV?
I mean, my experience with F1, I think the thing that people don't realize is not just how loud it is, but especially like when you're in there and you actually have like the headphones on and you hear them talking to the drivers, just the complexity. I mean, that's the thing. It's like, it's really amazing.
Did you change a tire?
I did, but I will tell you at Indy 500, I came close to almost changing a tire.
Okay. Dan Ives with
Investors can own it, Tom.
Securities.
Liberty Media. You can own Formula One. FWONK is the ticker.
Perfect.
Liberty Media. You can own it as a public investor.
Why is Apple doing that? Explain. Let's go tangential. Paul's dying to get to NVIDIA and the Google thing and all that. Why is Apple doing Apple TV? It's called Dad TV because no one watches it. They got some product out. They've had some successes. But why waste their time on that?
Yeah, I mean, to me, it's all about where they're ultimately going to take this. I mean, in the future, and we'll see as Apple ultimately goes down the path with Gemini and in terms of the AI future, they need to have as wide of a content lens as possible. And I think when you look at Apple TV, it's all part of, look, the quality speaks for itself. Quantity's been the issue. But for them, it's just they're going to continue to have irons in the fire. That's what they're going to do.
The TV show Pluribus, it's a sci-fi thing. Yeah. She's home all alone. Everybody around her is like a droid. Okay. She's watching surveillance. It was great.
Fantastic.
Why don't you get to NVIDIA right now, Paul?
So, Dan, the AI story here took a little bit of a turn over the last couple of days here. Meta placing a big chip order with Google, further calling into question the position or the dominant position of NVIDIA. Give us your thoughts about that whole thing. I mean,
look, Google TPU, and especially with Broadcom and TSMC as the builder, that's been around for over a decade, right? So it's not that it's new per se. I think the issue comes down to demand and supply for NVIDIA chips are 12-1. So the reality is that
to supply of NVIDIA chips 12-1. Wow.
So look, when you look at Meta, like they're not going to be able to get everything they need from NVIDIA. So they got to look outside. When you look what Google has, I'd say it's probably 3 to 4 years behind where NVIDIA is. But again, on some certain instances, it could be good enough. And look, that's where we're going. I mean, the reality is when it comes to AMD, when it comes to big tech, eventually you're going to see Apple, you're going to see Meta, you're going to see Microsoft. They'll build their own chips as well. But there is one chip in the world fueling the AI revolution. That's NVIDIA.
So that's kind of how I thought about it yesterday. I was kind of surprised to see the sell-off in NVIDIA because my thought was, all I hear from guys like you and technology folks coming in here is that the demand for AI is just, I'm not going to say insatiable, but boy, it's outstripping supply for sure. And you got to get what you can get when you can get it.
Look, just spending 3 weeks in Asia, I mean, we've seen demand accelerate 30% in the last 6 months for AI. So it comes down to, like, it's easy to call, say AI is a bubble in the spreadsheet or in 25th floor of New York City office building, but when you actually see what's happening there, look, only 3% of enterprise in the U.S. have gone down the AI path. None in Europe, Asia, ex-China, none. Right. And now you're seeing sovereigns in Middle East, and for the first time in 30 years, the U.S. is ahead of China when it comes to tech.
You're a piñata on Wall Street. People love to go after you on Twitter. It's the close, it's the act, and all that. Underneath it, we know, folks, not only Dan Ives, but Wedbush, there's some prodigious tech chips, like going to Asia, like actually walking in a factory, find out what's going on. Here's the reality for our listeners, our viewers worldwide. April 3, a leading newspaper just reporting the news. Apple shares fell more than 9% in response to the president's plan for steep tariffs on products made abroad, led a sharp sell-off in tech stocks, which is loaded with technology. OMG, April 3rd sank nearly 6%. Apple is up 65%, printing 280 yesterday. How do our listeners and viewers digest the news and the day-to-day panic and yet stay on board this historic American path?
Look, and we've talked about so much on the show over the years, right? I mean, the reality is that there's no bigger consumer install base in the world than Apple. 2.4 billion iOS devices, 1.5 billion iPhones. And it comes down, besides just the cash generating machine, everything we see in services, when you look at the AI revolution, okay, they've watched it from the stands so far, but now they're about to get into the field and actually do it and monetize the install base. The consumer AI revolution comes through Apple. And I think that's something that we're going to see with Google partnership and others. And Tom, I just continue to view it as like $75 to $100 per share incremental will be added to Apple for AI. And that's my view. Like they've and also look at this iPhone 17. It's been a surprise upgrade cycle that no one expected.
With Gemini, is Apple under less pressure to do something? This whole do something?
I'd say more pressure, but they couldn't do it till Google ultimately won the DOJ suit. Once they won the DOJ suit, that's where the candlelight dinner between Sundar and Cook start. And I think that ultimately is now where that's tracking to what can be a deal that couldn't have been until they won that deal. And I think that's where they're going to go. They're not buying Perplexity. Right. They're going with Google. They're going to go down and bet heavily on them.
Dan Ives with Wedbush with us here on a Wednesday before Thanksgiving. As you get ready to travel, the horde comes over to the house. We say good morning, all the different ways you listen to us. Thank you for discovering Bloomberg surveillance in 2025. We'll be here Friday. Paul Sweeney, your people, it was a big argument, wasn't it? I mean, your people went back and forth on this. But we'll be here Friday after Thanksgiving. Paul?
Dan, talk to us about Meta a little bit. I think that's one of the ones the market's unsure of as it relates to the AI play there. Stock's down about 20% from its recent high. So some concerns there. How do you position that?
It's a table pounder buy because the reason that stock's off is because Zuck right now, wartime CEO, focused on increasing CapEx over the next year in this arms race, and you're seeing obviously pressure in terms of earnings and cash flow. But that's what you want to see them do. You were talking about monetizing the AI revolution over the coming years, the 3 billion users that they basically have when it comes to their consumer ecosystem. And that's the smart move. I think right now, investors, it's very easy knee-jerk with the bury, the AI bubble, all the worries. The reality is that there's 2 more years at least left in this tech bull market. You're in year 3 of an 8 to 10 year build out. And it's truly a 4th industrial revolution. I think Meta is going to be proven that this is the right move, what they're doing.
In the zeitgeist this weekend is the partition that, yes, we appear to be using AI for search stuff. And Paul Sweeney the other day goes, should I go with Ocean Spray cranberry or something homemade? That kind of stuff. Or like task-driven AI. When do you perceive America makes the shift to a more sophisticated use of AI?
Yeah, it's a great question. But today it's enterprise. I mean, the reality is the consumer AI revolution hasn't started. ChatGPT, and we see that. But it's all enterprise. I mean, the spending we're talking about called the next 2 to 3 trillion is just enterprise. When it talks about consumer, it's autonomous, humanoid robotics. It's the future of the consumer.
I don't want a goddamn robot to make my cranberry sauce.
Listen,
that's what's happening.
Again, and I continue to make the call. Keene will be in a robotaxi in New York City.
I saw one the other day. I thought it was Ed Ludlow.
And again, you never know. It could be Ludlow.
So, all right, let's go to that robotics and all that kind of stuff, because that's kind of the story behind Tesla these days. It's not about bending steel and making cars and things like that. So the stock's up 4% year to date, so it's really lagging the market. It's come back from, I guess, the biggest concerns where we were several months ago. But when you talk to your institutional investor clients, what are they telling you about Tesla?
It's all about the future. I believe autonomous and ultimately Optimus Robotic will be the most important chapter ever in Tesla's growth story. And I think now Musk being wartime CEO, having the comp package, potentially $1 trillion man, this will now define Tesla. And I also think you're going to see a regulatory roadmap that's going to ease when it comes to autonomous, specifically on the robotaxi build out. You're going to have 30, 35 cities. And I think Waymo is basically going to be a rounding error relative to where I see Tesla.
Let's go to our 3 radio stations. Good morning, 92.9 FM Boston, 99.1 FM Nathan Hager Radio in Washington. Here, Bloomberg 1130. How does a robotaxi get across the Charles River right by MIT? How does a you turn left there, it's sport. How does a robotaxi get around DuPont Circle? How does a robotaxi get down Fifth Avenue right outside the Trump Tower? I don't get it.
Look, I mean, if you look, it's data driven. I mean, the reality is that
is there proof of concept that they can handle normal urban traffic?
What everything I've seen, and obviously we've been there in Austin, you're going to continue to see it expand, across many cities over the next few months. I believe we're there. Now, I'm not saying that you're going to see the geofence area continue to expand, but it's my view. Next few years, 20% of cars on the road, whether it's New York City, whether it's Boston, whether it's Chicago, you're going to look around. And you're not going to see a driver.
Enough chat. What's your single best buy right now? Is it Meta or is it something different?
I mean, to me, single best buy right here is Microsoft, the relative to what we see in terms of the stock.
Why is it down?
Because the view that now Google, now Amazon, others on the hyperscale are going to sort of eat their lunch. Look what's happened to Oracle as well. Look, New York City cab driver was bearish on Alphabet and Google to start the year. Today, they're bearish on Microsoft, and I think that's why that has a $100 upside.
On Microsoft, just is one example. Are they open AI? What's his name? Sam Altman.
Sam Altman, yeah.
Sure. Are they down because they're affiliated with Sam Altman?
I think just like Oracle, there's that too big to fail concept, right? Where anyone that touches OpenAI, that's ultimately been an overhang. But it comes down to that would be like me being like, okay, if I could have more Peter Luger steak, would I have it, or would I rather own White Castle?
With the Amex you got at Wedbush, you got to be going Peter Luger.
Again, you got to go Lugers, but the reality is that OpenAI, it's the Peter Lugers of technology. You want to be associated with it, not associated.
For those of you on YouTube, the interns are in our ears. We got these holiday interns, and Sweeney's intern is from Penn State. I'm shocked.
We are.
Nobody cares.
We are.
Paul, Dan, Penn State, go Paul.
Who's going to be the coach, do you think?
I mean, look, I think we'll see it probably Monday.
Oh, okay.
That soon?
I continue to think it's either Chesney from JMU.
Yeah, he's at
or there could be a mystery candidate that we'll see how that emerged over the coming days. So I think a big 40,
a mystery candidate.
A mystery candidate.
Chapel Hill.
No, please. We better days are ahead for Penn State after a dark year.
Okay. Yeah. All I ask, you're such a hitter and you're so F1. Next time you go to F1, take young John Farrow with you.
Look, first of all,
I play the game. John viscerally gets
the reason I got into F1. It was Netflix and Farrow.
Yeah.
It's a thing.
I mean, he wears. He's like head to toe in Ferrari.
Sure. I mean,
he's
that's how you roll.
The whole thing.
That's the kids.
When's your next F1 you're going to?
I mean, I have a few, but a few on the docket. Middle East and some other ones.
Nice.
Dan Ives, thank you. Too extended a conversation. A lot of good information there with his single best buy, the gentleman from Microsoft. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
We got people out there really in the trenches about thinking of the future of retail. Tiffany joins us right now. out of Penn, out of Northwestern, their fabulous MBA program. She's the Boston Consulting Group. And she's like, not every day, but every third day at Highland Park in Dallas.
Yeah.
I mean, that's the way she rolls.
That's
Tiffany, thank you for joining Surveillance this morning. Let's start there. Is luxury fixed? I mean, there's this China OMG. China's terrible, but America's doing great, double-digit growth. Where does luxury fit in for the holiday season?
Sure. Luxury is one of those categories where, based on our recent survey, we are planning on seeing some recovery during the Black Friday season. It was one of the categories that when we surveyed across, we saw an increase in spend.
Black Friday used to be 1 hour in front of Walmart with 3,000 people.
Exactly.
And Tiffany says it's a season now, Paul.
Yeah. And here's something that surprised me, Tom. In-store shopping is making a big comeback as fewer only shop online. Tiffany, talk to us about that. If I'd never gone to a store again, I'll be happy.
Well, what we're actually seeing is that most shoppers are planning on shopping both in store and online this holiday season. And the reason that they want to go back in store is they want to touch and feel the products, right? They want to be a part of experiential retail. They want personalized help as they shop. And it's really in line with what we've been seeing all year long, with mall traffic continuing to come back, in-store purchases coming back as well, as the hybrid shopping channel, if you will, becomes the norm. And I want to emphasize that point on hybrid because we are really seeing consumers grow across channels during their shopping journeys, including how they're using AI.
All right, so talk to us about AI. Can AI like kind of make my shopping list for me and kind of go and buy the stuff for me?
AI can definitely do both now. That being said, I would say most consumers are still using AI more in their initial shopping research and inspiration. And we actually found that about 50% of consumers plan on using AI in this holiday season.
I'm addicted to it. I had to do a search yesterday. You ready? Yeah. Dark chocolate.
Okay.
I know nothing about dark chocolate. I grew up with Bosco.
Yes.
Okay. Dark chocolate. I go to Perplexity, Tiffany. Dark chocolate. Mm-hmm. Boom. There's like 3 types to buy, just like that. Okay, Tiffany, the basic BCG question, and Paul brought this up yesterday. What inning are we in for the growth of online, for the growth of Amazon and Walmart? If it's a baseball game, does Dallas have a baseball team?
Yeah, the Texas Rangers.
Oh, they do.
Sure.
Yeah. But Tiffany, what inning are we in with our online experience?
I think it depends a little bit on what angle you're looking at it from. But if you think about where we are, I would say we're still in the middle of the game because, you mentioned Perplexity, right? Large language models like ChatGPT, they are really changing what the potential shopping journey is. And that, retailers have to think about what their strategy is within that. It's not an all or nothing game. And so how they think about, showing up in AI search becomes more important than ever now.
How are the retailers dealing with tariffs here and passing along whatever cost increases they might be bearing? Are they taking it in their margin? Are they trying to pass it along to customers? How's that playing out here? Because we don't hear as much about tariffs as we did, maybe beginning of the year.
Yeah, I think everyone's settled into sort of this new norm when it comes to tariffs, if you will. And it's a mixture of both, definitely, right? They've taken some in their margins. They have passed some along through. And for this holiday season, they know that consumers, right, still have expectations when it comes to discounting and promotions.
Right.
And so they're making sure that they can meet those expectations.
Tiffany, quickly, one final question. Okay, so all of us are buying off this Affirm kind of thing where it's set out in payments. I don't know what you call it, like Affirm and, all the others, folks. If I go into a given store, they want all my money now or a charge card. But if I buy online, I can spread out the payments. Where do you see that dynamic in 2 years, in 5 years?
Sure. We've seen actually a stabilization in the buy now, pay later trend. So while there's still a consumer and still categories that's going to play a meaningful role, I think we're seeing it balanced with those desires to go in store that I was talking about and the benefits that you get when you go in store.
Is Highland Park, I've never been. Tiffany, in Dallas, Highland Park is that's sort of like where they invented one-stop luxury, right?
We do have a really lovely shopping center in Highland Park that has a lot of great luxury stores.
Give us one experience. Come on. Not using the BCG Amex. I mean, what's your favorite store?
Well, I must admit, my favorite store in Highland Park is actually a bakery. So it's called Bird Bakery, and I love the baked goods there. They make an excellent scone.
Great. You get to come back on the show. Michael Barr says, bring her back. Tiffany, thank you so much with BCG Dallas here to get a sense of where we are in this retail season. It's a journey, she said. Stay with us. More from Bloomberg Surveillance coming up after this.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
For the arguments in the kitchen, out on the back porch, at the Thanksgiving table,
Sure.
where you're getting the evil eye from grandma about the market, you just wish you were sitting at Thanksgiving with Andrew Slimmon, Morgan Stanley investment manager. He writes one of the most intelligent notes on the street. Get it from Morgan Stanley. We protect the copyright of all our guests. And he's basically saying, forget market timing. You have to participate in the American experiment. Andrew, thrilled to have you on the day before Thanksgiving. How do you develop the faith and belief, the conviction to own equities after this great bull run?
Well, Tom, before I begin, I got to say that was the most unique introduction I've ever received. So congratulations.
It's work. Well, Lisa's given me the beverage of her choice before she's trying the mulled whatever it is on me here. Continue, Andrew.
So if I'll give you an answer. If I go to my Bloomberg terminal and I look at what has worked from a style standpoint the last 10 years, value, growth, dividends, what's worked according to your Bloomberg? It is momentum number one and revisions number two. Long down the list is things like dividends, quality, value, growth. It is momentum and revisions. And the reality of the market is that earnings, i.e. revisions, are very strong right now because the economy, for all the talk, earnings have come in better than what really Wall Street thought, certainly since April, but even since the beginning of the year. And so that at the end of the day, it's a long-winded way of saying stocks move with the second derivative, which is earnings revisions, because stock prices embed today expectations of the future. You don't buy a stock based on what's happened in the past. You buy it based on the future. And if the future looks better than what is expected, stock prices go up. And if it's worse, Tom, in other words, since I've been in this business, stocks don't go up for long when companies are telling you business is as good as expected. So what gives me faith is I see a positive backdrop for earnings.
Bottle it. That's the single best idea today. Just wonderful, Andrew.
Andrew, I guess we're entering, what is the fourth year of this current bull market here? So I'm sure you get the questions, how much longer does this thing go? What needs to work to continue this bull market? What do you tell folks these days?
Well, certainly earnings have to keep going. The market's not cheap at, 22 times earnings, but, I push back a little bit on that for two reasons. Number one is, the dynamics of what comprise the S&P today is far more profitable. Companies are far more profitable than in the past. So versus average is a little misleading. And number two is, again, valuations are only as powerful as the denominator, which is the estimate. And that's turned out to be too low. So I think there's a good backdrop for equities in the fourth year. What's fascinating is, Paul, if a bull market makes it to the fourth year, now a bull market ends when you have a 20% pullback, which we haven't had. Every time the S&P has made it to the fourth year, it's gone up in the fourth year. It's never had a down year. So that's pretty powerful perspective for equities.
Andrew, 2 years ago, nice quote from you here. Quote, why should I buy equities when I can lock in a 5% risk-free yield? Discuss.
Oh, My argument, Tom, is the stock market is following a classic behavioral path, which is unfortunately, the only consistency of this business, and you know this, Tom, as well as I do, is people sell low and they buy high. It's the only market I know where when prices go down, people want to sell.
You just described my investment strategy.
Exactly. Well, it's triple long cash, whatever you have. But look, in 2023, we had just come off a 25% decline. It was a wonderful opportunity to buy stocks, but the reason why we had a 25% decline was the Fed was raising rates. So suddenly, now short-term rates look attractive, and people didn't want to buy equities.
Andrew, we got to go. Are the Chicago Bears for real?
We're going to find out tomorrow. I know my whole family wants to watch for the first time in a few years, so that could be kiss of death.
That's a good thing. Andrew Slimmon, thank you so much. The Morgan Stanley there, just fabulous note. Again, get that note from Morgan Stanley's. Stay with us. More from Bloomberg Surveillance coming up after this.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Stephany Chen joins us right now. She's absolutely definitive on this at Trinity Investments, Los Angeles. And I want to really emphasize this, folks. If you go to Michigan State in a hospitality, Paul, I don't know what that's like. It's like, religion at the Vatican or something like that. It is the program in America for the hospitality business. Stephany, in your racket, did everybody get the growth of luxury wrong? Did you see it coming? Or is it like, OMG, now it's here?
Yeah, no, appreciate the time and thank you for having me. I think from a luxury perspective, the trends were always very positive, right? I think pre-COVID, there was always a sense of, that type of demand being there. I think as you noted, from a post-COVID environment, the need for experiences has definitely skyrocketed. And what we've seen is, discretionary spending and the want and to really kind of focus on travel and experiences has definitely increased significantly.
What does it mean? Like Paul's the one, I don't have a life, Stephany. Sweeney's hit every golf course, like the JW Marriott, Phoenix Desert Ridge. Is that near Scottsdale, right? Sure. Yeah. I mean, these places have become ginormous destinations, right? Yeah, no, correct. And I think there's, these what we like to call destination markets are really where we focus our attention, just because, again, like you noted, they're just such a diversified demand base, right? You have the leisure component, you have the group component, you have the corporate component. And so I think, from a leisure perspective, what's really driving customers and consumers to travel is the experiences and what you're offering. Because I think right now, what's differentiating the product is what you can offer from an experiential perspective.
Stephany, so where at Trinity Investments, where are you guys allocating your capital in the hospitality space these days?
Yeah, so like I noted earlier, what we like to call destination markets, whereby, whether that be resort, urban, really places where you can focus a lot of the kind of group leisure and corporate demand. So a lot of the hotels that we focus on are, let's call it 300 to 400 rooms and above. And the reason for that is because, there's an ability to yield manage the properties and kind of, when the leisure component is potentially on the lower side, you can really drive the group demand. And so a lot of the hotels that we focus on are kind of larger in scale as a result. And they are typically focused in, let's call it, these destination markets that really drive a lot of this type of kind of demand base.
In New York City, for example, I'm wondering if it's in other cities, a lot of boutique hotels coming here with names like, the Delano, for example, trying to rebrand properties here in New York, and maybe brands that are working in other parts of the world, trying to bring their brands to New York and other urban markets. How do you invest in that?
Yeah, I mean, look, the boutique segment is definitely one that has been quite frothy. And I think a lot of that, it goes back to the whole experiences, right? And I think what the boutique segment has done really well is to provide this different experience relative to kind of the different niche that they're able to offer. Unfortunately, because of the scale of what we like to focus on and because we are value add investors, we tend to focus on these larger assets that aren't necessarily boutique in nature. But you're right. I mean, the trend in this boutique style type of segment is definitely one that has picked up. And again, I think it all goes back to experiences and people wanting to have that differentiated type of experience.
Circle back to the airlines. I mentioned Ed Bastian and Delta Airlines. I mean, in your world of luxury boom, does that filter right back into the airlines where there's fewer and fewer economy seats and more fancy seats?
Yeah, I mean, look, there is and there isn't. I would say from a supply demand fundamental perspective in the luxury space, it's still quite favorable, right? And what I mean by that is there's still not a lot of new supply relative to that kind of, let's call it luxury sector. And so what that does is obviously deem really well from a fundamentals perspective for the existing hotels in kind of the segment. So I think the supply demand fundamentals, there's still a demand for that, right? And we see it from a RevPAR, revenue per available room performance standpoint, whereby it, through year to date, October of 2025, RevPAR continues to grow, particularly in the luxury and upper upscale segment. And it's really kind of like, let's call it the low 20% improvement relative to where we were in 2019. So I think what that suggests is that consumer is still there and wanting to pay that price to have that type of experience and quality. So yeah, I think that the supply and demand fundamentals, however, are still quite favorable because there is not a ton of new supply within that sector.
Stephany, thank you so much. Stephany Chen with his Trinity Investments Los Angeles here.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.